Hey, welcome back, guys, to another episode of Forex Tech Magazine. Hope everyone is doing well. Happy Tuesday to you. This is your host, Lewis, and before I get started too far into this, I want to go over the disclosure for just a second, and also too, I want to welcome my new subscriber. It looks like it's Maxo KR34M. Don't know if I pronounced that right, but hey, listen, welcome, my friend. Also, too, just want to say thank you to all the folks that's been with us since day one and all the new folks that's checking us out. We're starting to make some really good waves here as far as in the community. More people are finding out about us, more people are tuning in, and I think part of it is just because of our, of our down to earth, our realness, our transparency, the fact that we show all of our trades, good, bad, or ugly, and then we go in and we talk about them as well. And hopefully you get something from that. Hopefully it provides you with some type of relevance, some types of, hopefully it gives you some type of motivation to get out there and become a better trader yourself. Now, disclaimer goes something like this. Um, any and all information that is received from our site, from this broadcast, or any type of material or information that we have out should be considered solely for educational and entertainment purposes only. Nothing that we provide should be considered as investment advice. If you are searching for investment advice, our recommendation to you would be to seek out the uh, advice of a licensed, competent advisor. All right, so now we got that out of the way. Well, let's go ahead and get right on into the reason why you came here today, which is for the trades. This right here is something else that I'm working on, so I'm gonna get out of this screen. Actually, this right here is something I'm working on for our live trade that we're gonna be doing. Probably either the latter part of this, middle part of this week, or first thing next week. We're gonna be looking at going into a um, Aussie dollar, US dollar trade, possible. But anyway, it's still too early to talk about it. We'll get into that later. So let's look where we left off yesterday, and that was with the three pairs that we were in. We were in the Great Britain pound, Canadian dollar. We were still in the Great Britain pound, New Zealand dollar, and the Great Britain pound, Australian dollar. Start from the bottom, work our way up to the top. Great Britain pound, New Zealand dollar. This is where we're at. This is our stop loss in the red line. This is our entry sell, and our take profit should be in green. It should be, there you go, right there by support line. Now, as you can see, we are not trending anywhere near our take profit. We are actually headed towards our what would appear to be our stop loss. It happens. If it happens, it happens. If it doesn't, it doesn't. Still a high probability that this thing will turn, and the reason being is just because I think part of this is just anticipation of the election that's built up for the U.S. market. That happens today. So there's a good potential that this thing will reverse downward. If not, the damage will be minimal. We'll take the hit and move back in at a later time. Now let's look at the reason why. If you haven't seen the video yesterday or the day before as to why we took this position and what was the thought process behind it. So if we kind of minimize the screen a little bit, you can kind of see that what was happening in this particular currency pair is that it was moving down over time, right? Here was a high, here was a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So it is, or it was rather, moving down, right, at a pretty good pace. It dropped down to this support level here, right, and then proceeded to try to move back up. But then what it did is just kind of consolidate it, right? Now, typically, if you're an Elliott Wave practitioner, you would probably say that this right here was the, after the fifth wave. This right here probably was your fifth wave or whatever have you, and then this right here is your correction. This happens after the fifth wave, and then after that, you start back wave one again, going down. Just same thing, even if you're not an Elliott practitioner, Elliott Wave practitioner. you just kind of notice the fact that after the market moves a significant way, that after a while, what it does, it consolidates, and then price begins to move back down again in the direction that was originally trending. And that usually happens about 70% of the time, right? After price makes a move, it consolidates for a little bit, then it starts to move back down. But this particular pair at this particular time, it looks like it's having a little bit of extended pullback, and it looks like it's taking its time to move back down, to move back down, make that move back down. Now, when we go in and we say, well, what can we do? What can we do better? What could we have? How can we improve this trade? The only real thing that I think that could have improved this trade is just our entry point. I put my sell entry, I believe, too close to what could be perceived as the support zone, right? And what I should have did is I should have backed it up here to one of the resistance levels, right? I think had I did that, that would have did two things. One, that would have just ensured that we got a better buy-in, and also that we would have had lower costs as far as if, the stop loss would have been triggered. And also too, would have helped to guarantee some profit, because by me coming back here and placing the entry here, definitely there's an opportunity to bring the stop loss down once we get into the profit zone, and then to have essentially what we would call a risk-free trade. Hindsight is 2020. At the time when I did this, just like I said, just looking at the fact that the momentum that was already built into this and it was going down, and then looking here where price had already hit that resistance and it looks like it was coming back down again, just just appeared to be that this right here would be an appropriate place. The other thing that you could do that I think really helps, excuse me, when you're looking at prices and you're thinking about getting somewhere, you think about selling close to a support or whatever zone. Not that I recommend selling close to support, because remember, when we're at support we should be buying, and when we're at resistance we should be selling. But you can look maybe a couple pips below the support, especially if there's a swing low right there or whatever, and a previous swing low, and then put your sell price or your sell entry under that swing low. And so if price crashes through, then it's potentially a breakout, and then you get some continuation in the selling momentum. That's just an idea, right? But anyway, nonetheless, still pleased at how it turned out. Still, just enjoy the fact of being able to kind of look at this right here and see how it played out. Remember, this right here is a demo account that we're trading right now, so it's not like it's real money that we're losing. Or real money that we're playing around with. This is just demo money, demo cash, and so it makes for interesting exercise in learning, or makes it into an interesting exercise as far as to learning or trying out different techniques, right? Sorry, I lost my train of thought for a minute. Need some. Check something real quick. Let's see something here. Just make sure everything's up and running. All right, good deal. I will tell you today we're probably not going to be here for too long. Today, just because we're not going to be trading anything, not going into any trades today, just because of the elections tonight in the U.S. I think it should give should be some give the market some new direction, and I think that's the reason why we kind of got this trending sideways over the last couple of days. Just because I think that right now there's still some kind of uncertainty as far as what's going to happen next, who's going to win what, and that's going to depending on how it turns out, it could definitely have a impact on the U.S. markets, and so we just kind of want to sit back and wait. Remember, it's not about trading every day. It's about make sure that when we do trade, it's high probability trades that have some potential to make us some make us some money, get us a good return on our investment. So this is the daily. What I'm doing here, I'm just looking at these candlesticks and how they bounced off these different support resistant lines over time. And even here, I mean, you got clearly, you know, a little flag pattern, a little, something going on right here. And once again, typically, you know, price consolidates and then it just begins to drop back. So we still kind of anticipate this thing to move. And I think that the movement is just not happening yet. It's just gonna probably happen after tomorrow. If I was a bet, man, that's what I would say. Or after the day, that's what I would say. Let's see. You see that? Right. Top. The angle up. Right. And so essentially what's happening is prices moving up, prices moving up. All right, so that means buyers are coming in, buyers coming in, buyers coming in. Sellers are, however, pushing it down, pushing it down, pushing it down. So they're creating this massive wall of resistance here, while buyers are pressing it up here. At some point, somebody's going to have to give. It's either the buyers are going to have to give out, or the sellers are going to have to give out. Considering the fact that the sellers got a pretty decent wall right here, this is an actual resistance zone. Let's see if there's any fibs on this too. Bam, bam, bam. Oops. No. No, I'm not getting anything. But yeah, considering that wall of that pressure right there, on personal opinion, look for this thing to look for it to move down. Look for it to continue to move down. Potentially. All right, so that is the Great Britain pound, New Zealand dollar. Let's hit the next one. Great Britain pound, Canadian dollar. This is the one that I was in previously. I got pushed out of this one this morning, or this afternoon rather. But let's look at the levels on here. Let's look at some of the information. Let's see here, break it down to the hour chart. All right, so the red line is going to be my stop loss. Blue line was my entry, and the green line, which is down here, was my take profit. So let's look at what we were thinking and why we got into this mess in the first place. And so we have to go all the way back to over here. This is like is this right? Last Tuesday? Yeah, I guess so. All right, so what happened was, if you remember from the last video, we saw what price was consolidating, right? I'll show you. So essentially what was happening. Price is making higher highs and lower lows. I mean, higher lows and lower highs, right? Okay, let's see here. All right. So we see, and here goes a high, here goes a low, here goes a lower high, here goes a higher low, here goes a lower high, here goes a higher low, lower high, higher low, lower high. You get the point. So anyway, price is coming to is basically creating this triangle, right? And remember what we talked about before that triangles typically, it's a point of consolidation, and price is going to move 70% of the time in the direction of the original trend, right? And the original trend was down, right? Right, it's going down, right? Right, going down, original trend. So with that right there being said, that was enough to say that, hey, you know what? We should be moving down with it, right? And so essentially what we did is found an entry point, right? We came back to one of the swing lows, priced it up under on one of the swing lows, and we hit our entry point, and then price proceeded to move down. Now we placed our stop loss a little bit under the last support, and part of the reason why is because we're looking at the size of that triangle. It was about 230. So we wasn't looking to try to get the whole move of that, but we, looking at just the size of the original consolidation and basically trying to come in and say, okay, well, how much could potentially this thing unwind, and felt that 178 was a decent amount of room for it to unwind. Of course, it didn't unwind that far. It unwinded, let's see, 114. So slightly off from my target, right? Was at about 60 some pips off from my target, which is okay. What we should have done, and this right here, the way we could have made this one right here better, and I think I discussed this before, which would have been to take our swing, our stop loss, and bring it down once we got into our profit zone, and just kind of ensure that we had a risk-free trade, and that if the trade starts to move against us, that it would be okay because at least we take some profit and not a loss at all in this particular trade. Now, some people say, well, why did you put your stop loss so far out? And the reason why I put my stop loss so far out is just because what I was trading here was a price swing, essentially. So I put the stop loss back at the last swing high because I was expecting another swing low, which was going to be lower than this original swing low here, which is going to take us back to this one. So essentially what I did is put the stop loss back at a relevant swing high. Now, unfortunately for me, that swing high wasn't relevant enough because price did make its way through there. This one right here might, however, actually be the relevant swing high for this particular pair. I don't know, but we'll see. We'll look at it, over the next 24 hours and see if that actually was the case. And if it is, it's something we can note for next time. But anyway, this particular pair did not work out. It is continuously moving up. And one of the ways that you can see when price is not going to be moving in your favor, especially early on, to kind of help you kind of like an early warning signal kind of to say, okay, hey, you know what, maybe I need to cut this trade short, would be to see if the price is making higher highs and lower lows, higher lows, and that they're higher than, some of your most recent or most relevant price points. And so essentially when you look at this here, when price is able to overcome this swing high, right? That is a signal that something is going on and that it could be something where it could be, the market is making a U-turn. So I'm glad we got out where we got out. I'm actually happy about the levels that we placed. I don't think there's anything wrong with this trade. The only thing I think that we could have did better with this trade is just, like I said, move the stop loss out once we get to profitability, just to ensure we had a risk-free trade. But once again, I'm not actively managing these trades, and I put them on once we leave out of this little training session, and then I just leave them on for the rest of the day, and however they work out, they work out. So, but this was a live account. Definitely would have been more hands on. Definitely been more active with that. So, at any rate, let's see here. Let me go back for a second. Well, let me do this right for a second. Let's just look at how this plays out overall. Ignore this scribbly gun. This is from the hour chart. But yeah, if you look at how this price has held up, right, over time, right, price original move was coming down. It hit the support line. It bounces back up. It goes through perceived resistance, comes down to support, goes back up through resistance, comes back down to support, goes up through resistance, comes back down to this support here, goes back up. And the reason why I initially took this trade is because seeing where it was at, seeing the fact that it was a little bit of a wedge there, right? Kind of like we were looking at in the previous chart, that there was an opportunity. There was an opportunity for us to sorry about that, folks. Trying to clear this up a little bit so it can make sense. Okay, cool. So yeah, but you see right here, there's a little bit of a wedge right here, right? Price is going up, price is going down, right? Kind of consolidating right there. And so that was the opportunity I was looking at, considering the fact that price had already came off its resistance and it was moving down to support. So the opportunity was that we can sell going into support. There was opportunity to make some money and hit our price target. And then of course, the market decided they wanted to U-turn here and go back up. So that kind of goes back into what I was saying earlier. You never know what's going to happen in the market, right? You never know what's going to happen with pricing. Something can come out in the news. Something can just, something can happen. And then all of a sudden, price is going to take a U-turn from its original trajectory that you might have projected it was going to go towards. And so the best way to protect yourself, no matter how good of a trader you are, no matter how good of an analysis you do, the best way to protect yourself is just make sure that you always are going to win. And that means make sure that you can set yourself up for a risk-free trade. And that means adjusting that stop loss as much as possible. And I know a lot of people don't like to adjust the stop loss just because they're afraid they're going to get kicked out of the trade too early and they're going to take, and not make as much money as they could have made on the trade. But just remember this right here. Almost every single day, there's a potential to have a trade at some point in time in the market. I'm not saying that you got to trade every day, but almost on any given pair, if you search hard enough, you can find it. You just got to be looking, and the problem is, you can't stay up 24 hours a day looking for, entry and exit points for for pairs. But the reality is this right here: if you don't find a trade today, then you'll find one tomorrow. So don't get upset or get, too dismissive if you get pushed out of a trade early. It's just part of the process. I'd rather you get pushed out of a trade early and make money than stay in a trade and take a loss. Follow what I'm saying? So that's the only thing that we could have did better on this right here. And I want you to keep a mental note or write these notes down, rather. Don't keep a mental note. Write these notes down because once we start getting to the live trade with the actual money, these are all the rules that we're going to be using from what we learned from these lessons here, because I think what we're seeing here on the demo accounts are pretty much how most people trade, as far as, they'll come in and they'll have a strategy in place, but a lot of times what they do is they'll put their stop losses too long, or they'll stay in a trade for too long. And then what happens is the price starts to move against them. They'll still stay in it. They won't get out, and then they wind up taking a loss, a bigger loss than what they should. or you know, you can take little small losses, but if you are consistent with bringing your stop losses up once you get into profitability zone, then you don't have to take small losses. You don't have to take any losses at all because everything that you do, you're basically profitable with. It may suck because you may end up only with $5 or $10 or $20, whatever, depending on how much you're trying to trade. But that's okay because it's $5 or $10 that you made, $5 or $10 that you don't have to try to make back, and that money compounds over time. Remember, the purpose of this trading the markets is not to just go out and hit home runs and make a big sum of money all at once. The purpose of this would be to compound the growth of your money over time with small consecutive wins, and then eventually every now and then you hit some big home runs, which adds a nice lump sum to your overall portfolio. Okay. Anyway, so that was kind of the thought process in this setup. Consolidation here, right? Already coming down off of support, headed towards I'm sorry, coming down off of resistance, headed down towards support. Should be easy, pretty easy, no-brainer type trade. But then of course, price decided to do something different, went up and wound up taking us out of our position. I even thought that hey, there's enough of little small resistance areas here, resistance zones, that even if price started to move against us, that it would have a hard time trying to knock through these resistance zones. But as you can see, there was enough momentum in this particular pair that it just pushed straight through it and pushed all the way back up through resistance. Now, with this pair here, I would probably expect this thing to start to move back down in the opposite direction. So even though we're not trading it, not looking to get into this today, maybe tomorrow or Wednesday, or even Thursday might be a better time to kind of come back into this and make this trade and make a move back down. Okay. So just kind of be mindful of that. Always be looking for your entry. Always be looking for particular points where you can get back into the market. Because if you got into the market once and got pushed out, I mean, it's always going to be opportunities for you to get back into it. So don't ever feel like that, hey, you just got to jump right back into it right away. Take your time, get back into it. Take your time, search for it, you get back into it. Trust me, okay? All right, let's see here. So let's get out of this one. Let's go to Great Britain Pound, Japanese Yen. All right, so this is Great Britain Pound, Japanese Yen, and once again, we're not into this pair here, but this is one of the ones that last week we definitely was trading with, and I think we were short in this one last week. For pretty much the same reasons that we were looking at the other ones, and it made a U-turn right on that support line and pushed back up. Now we're at this resistance, and so the question would be, well, where do we go from here? Once we're at this resistance, is the price going to continue to go up, or do you think the price is going to start moving back down again? I anticipate that price will probably move back down again for this pair. And what I'm starting to notice on all these pairs for the Great Britain Pound is that pretty much all of them are in a consolidation period right now, right? Where they're all just kind of trending, sideways. And so, and I think that a lot of that has to do more so not with the other currency pairs it's matched up with, but more so just with the whole Brexit and all that stuff that's going on over there. So I think as we kind of get closer to knowing more about what their plans are, what they're looking to do, I think then you're going to get more of that opportunity to break out. But I think for now, the best bet, if you didn't want to sit on the sidelines with it, then I would just continue to trade in the direction of the trend, which would be, down, right? Look for selling opportunities. So when I look at this right here, I'd look for selling opportunities right here at resistance. So I would look for selling opportunities since we're so close to resistance, and then put our stop loss couple of pips away, from a swing point or our entry. So that way, if we are wrong and it continues to break up, then at least that way we're not going to take too big of a loss. Okay, so let's see here. Let's look on our chart. Yeah. And actually on this one right here, this is interesting. What I did is I put in I used the Fibonacci Smart Tool up here, and I kind of went in and just found the swing low, and just hit it, and just looked at how it populated. And according to this right here, which I don't have any reason to really doubt this, looks like the target for this particular pair is going to be at the 148.55 handle. And I mean, if you look at it, it looks like it's pretty spot on. Yeah, that's where it's going to go. Probably expect to see that hit sometime during this actual trading session. And then from there, which once again, we're above resistance, right? That makes sense. Oops. Yeah, that makes sense. It's about 47 pips. All right, if you got a standard lot, it's about $470. That could be made. Put your stop loss back below your swing low, which, once again, I think shouldn't be too hard to hit that one. Oh no, I might trade that today. Maybe I'll do that one. I don't know. Let's see. What's the next one? Next one is the Great Britain Pound, Aussie Dollar, Aussie, the Oz. Same thing here, man. I mean, it's the same pattern over and over again that we're looking at here, right? Prices moving down, prices has to consolidate, right? Once again, and probably, like I said before, a couple things maybe could have done the better, prevent this from happening. I think where I was caught up or where I was looking at was a couple things, and I can tell you real quick how to correct what I just did. So, a couple things. One, one, probably should have waited counted, right? She probably should have went 1, 2, 3, 4, 5, whatever. Looked at it, wave counted, and then I could have known that, okay, I'm kind of at the bottom of this wave pattern here, right? It's about 5 waves that we looked at right there, and knowing that it's going to be a bigger consolidation, a bigger pullback, right? Than was typically here, because I'm looking at these previous consolidations, previous pullbacks, and they're pretty short-lived, and not that steep, except for this one right here is pretty steep, right? So that would have gave way to say, okay, you know what? Maybe I don't need to go in to this particular pair, at this level, right? One of the things you could do is you could always put your entry price below a swing low. There's another suggestion, right? So you see you got a swing low here, right? You put your entry price. That means when price breaks down below that swing low, boom, you're gonna get an entry, and then you could always put your stop loss back at the swing high, right? Boom, boom. That's kind of wide, but you know what? It can work, right? Because if price is truly moving down, then price is not going to bounce back up above your previous swing high. It's going to always be lower than its previous swing high, right? And it's going to keep moving down, okay? And when we say swing high, we're not just talking about intermediate. We're talking about, recognize lower swing high, right? Recognized. Okay. Anyway, that's one other way to trade it. And if you're going to trade like that, once again, it takes patience, right? Because if you see price moving down immediately, you may want to just try to go ahead and jump in there and capture it. But it takes patience, and you got to let the market come to you. So that's one way we could have did better. The other way we could have done better is, like I said before, is once price moved into the profit zone, just immediately go ahead and bring that stop loss down to begin to take profit, the lock-in profit. Essentially, the price starts to move back against us. third way would be just not to put an entry sell at the support level. Once again, look for the swing low and put it below the swing low, and then make sure that we put the stop loss back at the swing high and wait for it to go down to that level and then hit. Right. So there's like three ways right there that could definitely improve this performance for this pair. But right now, this pair is currently looks like it's on track to potentially knock out that stop loss. But we'll see how it plays out over the next 24, 48 hours. Just because, once again, the U.S. elections are in play, and this thing does have the potential to turn back around and go back down. It just depends on who wins and what happens, okay? But as you can see here, it's definitely making this move up. It's low, it's high, low, higher low, higher high, higher low, higher high, and possibly higher low here, and then maybe another higher high up here. So, but anyway, the stop loss is positioned a couple of pips above this swing high. So, if it does go through it, then you know it could mean that the market is making a U-turn, or this is just a steeper correction is happening in place with this currency pair. Either way it goes, if it crosses that red line, that means I'm out of this position here, and then I have to go back in and look for re-entry at a later time, which would probably be towards the end of the week when we'll be looking to try to get back in. Okay. So let's see here. Let's look at the next one. Okay, which would bring us to the Great Britain Pound US dollar. This particular pair, not in it at all, but it's pretty interesting though if you look at it, right? I did the fibs on this one last week, and when I did last week, this is I think like last Thursday or Friday, right? And I was saying how like wow, you know, just came down to the bottom of the screen, hit the smart fibs, right? And guys, you know, this is something any of you guys can do, right? Hit the smart fibs, and boom, 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 it immediately put this on the screen, right? And we looked at this, we saw how price bounced off of this support line, right? And then how it gapped up on Sunday. It was really amazing how perfectly this played out. And it looks like that it should take us up to about 131.54, right? Somewhere around that time frame. I mean that the price amount. So that's about how much? It's about 81 pips away. That's what it's $814 potentially that's there. Once again, that's potential money that could be made. And if you look at this, let's see, as for where should we put our stop loss? That's pretty high reward to risk ratio. So you're risking 121 pips for 81.4 pips. I don't know if you necessarily want to do that because you kind of be upside down in your risk to reward ratio, but it's one of those things that if you feel confident, if you trust your Fibonacci sequence, then something that you could definitely go for. Or perhaps instead of trading with a standard lot, you may want to trade this right here with a micro or a mini lot. So therefore, even though you're risking more pips to be lost, right, the dollar amount per pip is not going to be as great as it would be if you're doing a standard lot. So standard lot is going to be $10 a pip. If you do a mini lot, it's going to be $1 a pip. If you do a micro lot, it's like 10 cents a pip. You might even do something in between where maybe you're only doing like maybe $5 a pip or $4 a pip or something like that. If you're working with a mini lot, you can definitely go in there and break it up so that way you can get that type structure. And so therefore you can still, if your minimum risk is going to be, let's say maybe with your account size, maybe you're not looking to risk more than maybe $200 or $300. By you breaking it up with a mini lot, and then accounting for that 121, pip potential loss, you can go in there and you can set it so that way that if it does pull all the way back to that swing low, that's all you're going to take is that $200 loss or whatever. But then you also give yourself an opportunity to be able to hit the 81 pips right there and put some additional cash into your pocket. So that may be something you want to look at doing. And actually, we'll do maybe a video or something coming up in the next couple of weeks where we kind of go in and we talk about those type of strategies. How do you go in and adjust, your account so that way when you're trying to manage your money and everything, because that's really what it comes down to, right? We can go in here all day and we can talk about, um, different indicators, different strategies, whatever, to be able to try to analyze what price is going to move. But the main factor is going to help with your success is how well you manage your money, how well you manage your money in and out of these trades. And so, in order to be able to do that, one of the things that you need to be able to do is you need to be able to go in and to get your pricing, keep your pricing correct. Okay. So I just want you to look at this real quick. I want you to see this. Right. All right. So this right here is the smart fib, and this is what I use. Yeah, this is what I just came in. Did you see that? I'm gonna happen pretty fast. Let me do it one more time for you. Smart Fibonacci, and if any of you guys have heard of Fibonacci or ever used Fibonacci, Fibonacci essentially is a sequence of numbers that's found all throughout nature and all throughout the universe, right? And what happens is a lot of traders use Fibonacci's when they go in a trade because it helps to kind of see where the market has been and also to project where the market is potentially going, right? Because it's a specific pattern that pretty much repeats itself over and over and over again. Now, I don't know if Fibonacci is some type of, you know, coded number pattern that, unlocks the mystery of the universe, but I do know this right here, that there's enough people, enough traders that believe in it, enough traders that follow it, that, use it, that it's something that you should, pay attention to in your trades, because definitely people are going to put, buy and stop um, orders at these sequence, right? And the great thing about the smart Fibonacci for smart trader is that you don't have to be an expert at using it. All you have to do is just know how to point and click, and then also too just how to look at colors, right? And if you're colorblind, then I'm pretty sure you can look at the, you can enlarge this, and then you see the numbers on here. But for the most part, if you're not colorblind, you can come in and you can see where your red is at, right? You see where your blue line, you see where your green line, right? And so essentially what you do is if price comes back into the red and then proceeds to move up, all you have to do is find your red, right, and your extension, and that's where you're going to put your price target at. It's just that simple, right? Red to red, and if it goes down to the blue, it pulls back to the blue, then you're going to come in and you're going to put your price target at your blue. And of course, if it pulls all the way down to the green, you're going to put your price target at the green. And if it pulls all the way back past the A, well, then you don't want to be in trade, because the trade's going to be dead, right? That means that the market is no longer following the Fibonacci sequence, and that pretty much the trade is going to be a wash, right? Look for it to probably potentially start going back in the opposite direction. Okay? But if you look at this pattern here, I mean, it's pretty much held up over time. Look at here, right? Price fell back to the red. Price moved up. Boom, to the red, right? Once again, price fell back, right? It's from here to here, still considered to be the red, right? Price moves up to what? To the red. Boom. Right? Now, will it move past it? It can, absolutely, but most times what happens is it'll hit it, right? As you can see right here, it hit it, boom, it'll pull back. Because there's a period of exhaustion after it makes these big moves, but it'll hit that sequence, hit the number, may pull back for a period or two, right, and before it proceeds upwards. Okay, so once again, Fibonacci is something that you definitely should pay close attention to. I do. I look at it, and not only me, I think a ton of other traders look at it as well. And the relevance of it is whether you believe in these numbers or some type of magical numbers that have some type of power over the universe or not, just understand that it definitely has power over the thought process of a lot of different traders' minds. So if everybody else is paying attention to it, then you should be paying attention to it as well. And the great thing about the Smart Trader software is that you don't have to go in here physically, try to draw it out yourself. It's pretty much a one click and done type deal. You click it, and then it pretty much goes out there and finds those sequence for you, right? So anyway, that is the Great Britain pound US dollar, which we're not in that trade either at the moment. But for somebody, hey, this might be a nice little trade to get into, make a quick 800 or some dollars. You know, it's not bad. Anyway, trying to think, is there anything else? I think it pretty much covers everything. I mean, we went through all different currency pairs. We looked at them. We looked at the trades that we're currently in. Talked about them. What was working, what wasn't working. How we could improve upon it, how we can make it better. Let's just kind of recap and take away what our trading rules are and the best way to kind of approach trades going forward. And I think this is good because what we're going to be doing next, like I said, within the next week or so, we're going to be trading live. The account that we're going to be trading live off of, it's going to be a currency pair. Oh, excuse me. But what we're going to be doing is we're actually going to be doing a futures trade, right? And the reason why we're doing futures trades is because it's a lot more leverage in it for me. I'm starting out with a really small amount, but there's a lot more leverage in it. And with that small amount, it's going to allow me to be able to kind of build it up a lot quicker than it would be if I just trade spot forex. But then eventually what I do is take the money that's from there, or at least a portion of the money from there, roll over to a spot forex account, and then trade that out as well. So that way you kind of see both kind of side by side, give you a better idea of how these things work. Okay. But rule number one, before we start any type of trade, we go in and we analyze the charts. We look at where our support and resistance are at. Why is that? Because, like I said before, once you go into a mall or a building, facility, once you walk in, there's usually a placard somewhere that says, you are here, right? And essentially what that you are here placard means is that, this is where you're at in relations to the rest of the stores or office space inside that facility. So it gives you a point of reference, and then it gives you an idea of how far or where these other places are located at. Same thing with support and resistance lines. It lets you know where you're at in the market. It lets you know, or should you be looking to buy, or should you be looking to sell? Is the market going up, the market going down, right? Next thing you need to be looking at, after you find out where you're at within the market, you need to be looking at what the price is actually doing in the market. Is the price making higher highs or lower lows, right? If it's making higher highs and higher lows, then usually that's considered to be an uptrend. If it's making lower highs and lower lows, usually that's considered to be a downtrend. Now, if it's doing that, right, over a short period of time, but over the longer trend, it's been moving up, but over the shorter period of time, it's going down, then what you may be looking at is essentially a pullback or some type of consolidation, right? Either way it goes, if you're looking at a pullback or consolidation, then what you should be looking for is the reversal. So, and looking for that continuation. I'm sorry, when I say reversal, I'm talking about reversing from the consolidation or the pullback, going back into the overall trend of the market. Because remember, when you're consolidating or you're doing a correction, 70% of the time, the market is going to continue back in the direction of the original trend, right? So you need to be looking for that that push back into the original direction. So that means that the market was going up originally, but it's pulling back right now, it's consolidating. Then you need to be looking at buying at support, and not necessarily so much focusing on selling at resistance. You could, but more so buying at support, right? And keeping that stop loss tight. The next thing you should be looking at doing is positioning your stop loss, that once you get into the profit zone, right, but you push your stop loss up, so that way your stop loss is in the profit zone as well, right? So therefore, you're looking to do risk-free trades, right? That's the name of the game. The more risk-free trades you can do, the more profitable you're going to be, and the better you're going to be at trading, because what you don't want to do is you don't want to have these long stop losses out there, and then price moves against you, and then, you take big losses, right? Ideally, what we want to do is be able to take big wins over time, but and when we say moving up the stop loss, um, it doesn't have to be a tight push up, on the stop loss where we just like snug right there with where price is at the moment. So that way price just jerks back, half a pip or whatever, and we're automatically out. No, it could be just that price is moved up, so that way maybe it's a $5 profit or a $10 profit or whatever, right? But price is like, really moving way down the line someplace. You know what I'm saying? And all we want to do is just make sure that if price does move against us, that we're not taking a loss. That's all. That we're making profit, regardless of how the trade turns out. And I'm gonna tell you something. If you're making a profit every time you trade, no matter what the trade turns out to be, you're gonna sleep a lot better, and you're gonna be a lot happier because knowing the fact that, hey, you know what? No matter what happens, I'm winning. Okay. Um, what was the other thing? And then just look at your, your risk to reward ratio. And once again, I think that if you got momentum on your side and price is truly moving in the direction that you need to move towards, initially you can start out with a higher swing low. So let's say like this particular one right here, right, where the potential reward is 81, potential loss is like what 100 and something. Um, and you say, well, I don't think I want to necessarily get into that one. Well, why not, right? And that's my question, because if you're going to adjust your swing low, right, if you're going to adjust your swing low, um, or your stop loss, not swing low, but if you're going to adjust your stop loss upward as price continues to move upward, right, then what's going to happen is that eventually that upside down risk to reward ratio is going to get right side up, right? Only time you won't want to do that is if you're not actually going through the steps and trying to figure out where we are in relation to price, and if you're just want to, what was that? You're not trying to figure out where we are in relation to price, and you're seeing price move in the opposite direction of what you're trading, and just you're hoping that it turns back around, right? Hope is not part of a trading strategy. Never has been, never should be. It should all be, hey, this is thought out, this is methodical, this is what I'm trying to do, this is what I'm looking to accomplish, and this is how I'm going to go about doing it. And if you're not doing that, then you're not really trading properly. You just throwing money out there, hoping that something happens. Okay, which once again is not good. At any rate, that's pretty much all I have for you today, folks. Like I said, not gonna try to keep it too long. Once again, we kind of finished early, so we got about 7 more minutes before the close of this 3 a.m. candlestick and get to the next hour. 2 pairs you may want to trade, like I said before, would be the Great Britain Pound US dollar and Great Britain Pound Japanese yen. Maybe, I don't know. Looks like they're has some pretty good upward momentum. Is there anything on the economic calendar for today? And also, by the way, here, let me just go back and just caveat this right here. So, only thing about this pair right here, if you were to try to trade it, remember, you're right here by resistance. And what do we always say? We sell at resistance and we buy at support, right? But because it's crossed over the resistance, right? And then see how it pushed back down, that resistance now looks like it's become support, right? So, it's highly likely that this has become support for this and that it's going to go ahead and finish out, making this push up to this mark. Now, that's no guarantee that it will, right? So when you trade this, definitely, something you may want to be cautious on, okay? Just want to throw it out to the folks out there, okay? So I don't want you to say, well, Lewis, you just said don't buy new resistance and blah, blah, blah. And now you just, told us to buy right up here. No, I'm not going to put that one on. All right, so what do we got here? This is for Tuesday. So, yep, U.S. midterm elections, very high. You got the German factory orders coming out. Got some other stuff coming out. A lot of stuff coming out of Europe for the euro. Says that this stuff is like low relevancy, but don't believe it. Sometimes, it might say low relevancy, and it might be the one thing that causes the market to crack under pressure, right? Got the New Zealand dollar unemployment rate, right? Change in employment. So definitely, you got some things here that could affect some of the currency pairs that we are currently in right now, especially the one for the New Zealand dollar. The unemployment rate is definitely going to have an effect on that. So if you don't think that's going to have an effect, then you don't need to be trading. U.S. midterm elections definitely going to have an effect on the Treasury notes. The Treasury notes going to have an effect on the U.S. dollar. So if you don't think that's going to factor in, once again, you don't need to be trading. You need to be sitting down and trying to still learn. And factory orders, once again, because this is going to be talking about the health of the economy for Germany, you know, or people putting their orders, you know, are they getting fulfilled, at what pace. Those things definitely is going to bear some type of effect on the market, just because it's going to help really kind of see if, you know, these are things that people are looking at, try to determine what's the overall health of the market. You know, is it a healthy market? Is it an improving market? What and what? Okay. Anyway, guys, listen, I'm about to get out of here. I thank you for your time. I appreciate, you know, each and every one of you tuning in and participating. Once again, if you guys got any questions, thoughts, or comments, please feel free to contact us on social media. You can also reach out to us on Facebook, on Instagram, Twitter, or you can just email us directly at questions@forextechmagazine.com. I'd love to hear from you. You know, a couple of you guys already emailed in, and you know, we chatted a little bit about some of the trades that you're looking at doing. If you got one that you want us to put up on the big screen for you and just kind of go in and analyze for you, definitely send us that comment. I'd love to sit down there and do it. And you can also hit us up on our chat when we're streaming. Oh, also too, that reminds me, we're gonna start streaming twice a day now. We're gonna, you know, of course, we're gonna still be doing this stream right here early in the mornings, but we're also gonna be doing one later in the afternoons as well. I want to get one after the close of the U.S. market, maybe around 6 or 7. I still haven't really kind of worked out the time yet because I have some other obligations, usually on Tuesdays and Mondays around that time frame. So we'll see how we work it out. But I do want to get some of that streaming in as well. And the reason being is because I think it's vitally important that, especially when we start going to the live account, to show you some different aspects of the market, right? And I want to give people opportunities to kind of tune in and actually look at us live while we trade, so we can get more questions, more interactions from you guys. Because I know a lot of folks are asleep right now, and so what they rely on is to, you know, me to put these videos out, and then they look at them throughout the day when they have the time. But I want to actually be able to do this kind of in real time, so that way we can interact more with you guys, hear your questions in real time, and see if we can answer them for you. You know, we've been able to answer a few people questions and talk to a few people, but not as many as I would like to. Want to be able to get a little bit more active with you guys, and just so I can just, you know, offer better value, better service to you. Okay. So at any rate, I always like to close with something positive, and so once again, I gotta get some new quotes, man. I've been thinking about the quotes that I have, and I keep going back to like 3, which is Les Brown, Zig Ziglar, and then stuff from the Navy SEALs. But this next one right here is from Les Brown, and but the reason why I love it so much is because it has been one that I have just personally used throughout my life, and that was the one that we talked about. Always shoot for the moon, because if you shoot for the moon, at least if you don't make it, you'll be amongst the stars, right? And that's something I always found personally to help me through life, because you know, we all got goals and we all got things that we're trying to achieve, right? And life can sometimes be very disappointing when you're not able to hit your goals, you're not able to achieve the things that you want to achieve. And so it's easy to get disappointed. It's easy to be easy to get depressed, or easy to just to kind of feel frustrated and not feeling at your best if you're not able to hit your goals and able to get what you want out of life. But the reality is, though, if you set goals, right, and even if you're not able to hit your actual goal, because you set a goal and because you went out there and you fought as hard as you could and you put in as much as you could to be able to get to that goal, that even if you don't hit that goal, that you're going to be far, far better than you would if you never would have even set that goal, right? And so that's just kind of the message I want to leave with you, is that, you know, always shoot for the moon. Even if you don't make it, at least you'll be amongst the stars. So even if you don't hit your goals in life, man, still set out and try to strive for them, because you're just going to be in a better position than you would be if you never ever set them and try to go out and get them in the first place. But anyway, listen, it's 4 o'clock. Man, I actually stayed longer than I had planned. I want to thank everyone for tuning in. Thank everybody that's going to be tuning in, looking at this broadcast later. Wish you guys the best. Take care. God bless. And I will catch you tomorrow. Bye for now.